Good evening, folks. So, just back with another trade breakdown. Today I'm just going to break down my trades taken from the 7th, which is Wednesday. So, the only 2 days I traded this week was from the 7th, Tuesday and Wednesday. And I'm in the replay tool at the minute. Basically, I'm just back at when the session candle started for my day. So, you can kind of see we've pushed out of the shitty range that we were in. And if I just bring on my trade from 6th, which is in and around here, I'm kind of looking to do the same thing here. Session bass is mixed. We have a bearish and a bullish candle. But what makes more sense? Well, for me, it makes more sense for price to continue because we've pushed, formed the resistance, then we formed the higher support, which is closed above previous resistance. So it makes sense to see price to continue. Now, from this time frame alone, targets, if I was solely trading this off the 4 hour time frame, where would be my sort of target? And my target would be up in and around here. We have a weekly resistance, we have a 4 hour support, we also have 4 hour resistance up here just to the left. Um, and we've got clean price movement through here. So that's originally what I was thinking. After reviewing one of James's charts in the morning, I noticed he had a daily resistance level, which is something that I overlooked. And I just skipped the daily. This is the resistance level here. Here. So as you can see, we've got our 4 hour support up here, our weekly resistance, our daily resistance, our 4 hour resistance is all in and around this region. But before that, basically, 12 pips or so, we have a daily resistance in here. Okay, now this is most recent. This is what I would be looking at. However, what I wanted to do was I wanted to see what actually happened in here. So what I'm going to do is just going to mark up the daily resistance. I'll just change that to daily resistance 165 700. And what I then done was I just actually went down the time frames to see what sort of reaction was in here. So as you can see, the candles on the 4 hour move through here quite easily. It doesn't look like there's any sort of reaction or rejection in here. But if I drop to the 1 hour, again, the 1 hour has moved through quite cleanly. However, we can clearly see as we came down and closed below the daily resistance on the hourly, the next candle's opened, pulled back, basically tapped into this resistance, and then it's left. I drop to the 30-minute time frame. I just go down a little bit, lower in the time frames. We can just get a bit more accurate with this level. So basically, on the way up, if there is no, this is my thought process. If we're on the way up and there is no volume, there is no big candles like this, which is going to break straight through, then I'm interested in this level because essentially this is going to be the first point of contact before we get to 4 hour, the weekly, the daily, and stuff, which is most recent. Price could just easily push through. However, I wanted to see if price actually broke through a volume and then came down and respected this, kind of similar to here. Because what I was thinking was, well, if we get a push through and we close above, even if price starts to pull back, I could, I would be confident in looking at this level here to hold as maybe support to continue this, or like a pullback to top this before price continues because of what happened when we closed below it previously in this area. So that's what I was looking at. The only other thing was, well, what if price actually just trickles up to it, and reacts at it and comes down and ranges and then comes back down. Essentially, the bass is mixed, which means, we still could get some form of downside or there's a higher chance based on probability. However, based on the previous 4 hours superseding the open, it makes more sense to the upside, but again, still can't rule out some form of downside. So rather than have my target up here, I actually said to myself, you know what, I'm going to make this my target. And it was actually interesting to see the reaction that price came here, or the reaction price had at this level once we kind of go to the time frames and play the trade out. This was my thought process in the morning, so I had my actual target based on 4 hour. I identified there was a daily level in between, and my thinking was, well, if we get to the daily level and we react and we come back to entry or we come back to stop loss, and I reflect on that trade and I say, how could I have done better? What could I have done? Well, I identified the higher time frame level. Why not just have my target there? If I have my target there and price continues, then I can say, right, that level was significant or it wasn't significant, or how could I have maybe remained in the trade? And from an efficiency standpoint, I feel like if I enter here per se and I get to here, I can just close that and be efficient and take the win. I don't have to sit through any sort of drawdown if we get it. If we bust through with volume, great. The only other thing I think I could have done was, if there was evidence of volume, I could potentially have maybe had my target up here, but just watch this level closely. Watch it on the maybe 5 minute or on the 1 minute, seeing what sort of reaction we got there, and then made a decision. So just reflecting back on the sort of management in and around this level, that's potentially something I could have done. However, or the overall idea. However, the way I managed the trade, I feel like I was efficient in what I done. So that was basically what I was looking at and the idea when I got to that level. So if I just fast forward um to where we are, so if I just go to the 4 hour, this is how the 4 hour closed. Um this is basically the session candle opening in the next 4 hour. So we can kind of see the 1 hour. We're in the form of continuation. We have no really already structure. We go to the 30-minute time frame. What I'm going to do is I'm just going to bring on my trade, which is here, and I've got some notes across here, and I'm just kind of going to talk through this as I go. So this is the most recent 30-minute resistance, and this is the most recent 30-minute support in here. I have it marked up, but for the talk's sake, I'll just fire it in here. So this is our 30-minute support. Okay, so let me just double check what time I actually entered this trade at. Bear with me 1 second. Bear with me 1 minute. Just gonna step out 1 sec. So I took this trade at 7 a.m. I'll kind of just go through it here. So 30-minute time frame. Just gonna skip this. Boom. 7 a.m. This is my entry. So as soon as price opened, I just got involved, spread and so on. I'm in and around here. So as you can see, originally my target was here. And then, like I mentioned earlier, I'd sort of identified that this is the daily level here, right? And I've made a wee note here. 20th of July, when price broke below this daily resistance, price retested this area before continuing bearish. So if we can get above that, that's the sort of idea I'm hoping, like the flip side. Now, I kind of just play this out. This is what's happened here. So I actually took 2 trades, okay? Because the first trade, as you can see down here, I closed full with a 1 minute candle closing below, right? I reflected on my trade from Friday, last week on the 2nd. After reviewing it, reviewing the lower time frames, reviewing how I could have managed that trade better, I implemented what I learned then to this. And if I just drop to the 15-minute time frame, at the time of me entering the trade, let me just go back. this was basically how my entry looked on the 15-minute time frame. So my entries here, my stop loss is below the support, which is below the 30-minute candle. Um, and this is the most recent 15-minute, right? So if we're looking at, say, for example, just 15-minute support and resistance, we've got 15-minute resistance. We have like a support in here. My stop loss is below. And what I set out, I said to myself, do you know what? If I set out, how can I lose less than I set out to lose? So I looked at this and says, you know what? If price starts breaking this 15-minute low, I'm going to get out of the trade. Right. So what I've done was I looked at this on the 5-minute, and this is actually 5-minute support. Right. I was looking at this in real time as the trade was playing on the 5-minute and the 1-minute, because what I wanted to see was what sort of reaction we got here. Is there a chance that price just opens and we go, right? Or if price starts to come back, first point to contact the resistance. Are we going to respect the resistance before we continue? There's also 5-minute support and resistance in here. Can we come deeper, react off that? If we come deeper to the 15-minute low, which is also 5-minute, basically noted here, if lower time frame closes below this candle or the low, I'm going to close my trade. And that's going to be a 5-minute candle, that's going to be a 1-minute candle. So if I just kind of play out how price is working um on the 5-minute, let me just remove that annotation. I kind of just skip through 5-minute, so we can back down here, right? But as we can see, we didn't close below. I'm not too sure if the replay tool allows me to come back on the 1-minute, but I will click it here and we'll see what happens. Yep, so 1-minute. What I'm going to do is I'm just going to play this out. As we can see, no 1-minute close below, we rejected. And when this happened, we sort of reacted here and we pushed up. I was saying to myself, God, like applying what I learned last week and actually seeing it in real time, you know, doing what I'd done then, I was even happy at this point. You know, I made a couple of notes on this in my journal as I was watching the play out, and I said to myself, even if this fails, this trade comes down and we close below here, and I close and I lose this trade, then so be it. You know, basically at the end of the day, did I stick to my plan? Yes. Did I execute on my plan? Yes. And I learned something last week and I implemented that today. So that's progression, right? So even if this loses, I was like, I'm happy because I'm progressed in that sense. And it's nice to see like this type of stuff happening, you know, where you're like you noticed something last week, you went through it in detail, got it broken down for you, you learned from it, and then you start applying that and you see not even the results, but you can kind of see how price is acting at those levels. So when this was pushing away, I was thinking to myself, is this maybe where we're going to push from? And I will that then look on other time frames. Is this maybe just a wick creation or whatnot? If I just play this out and we'll watch it here, you know, I was content. You know, see the thing is, see if you plan a trade and you plan a trade and you execute on that plan and you lose that trade, like to me, like that doesn't annoy me, that doesn't bother me because I done what I set out to do. And you know, we all know in the market you're not always going to win, you're going to lose. But if you stick to your plan, you execute on your plan, then and you're consistent with it, and you're entering on the right candles and that sort of thing, then you know you're going to have a good chance of succeeding. Um, so again, we came down, touched that again, didn't close below. Um, and this is how the I just pause this here. Sorry, I'll just bring this back to here. This is how the 30-minute candle closed. As I can see, looking at the 5 minutes, we're sort of creating higher supports, looking nice. 15-minute, we have formed a higher support. Is this where we're going to push from? And the 30-minute has closed, sort of, rejecting lower time frame support in here, and it closed just below the resistance. Obviously, closing higher would have been better, but that's where that closed. So if I just go back down to the 1 minute and I continue here, we start to come down again, and we actually closed below. So what happened is this candle closed below, next one open, broke the low. As soon as it broke the low, I just closed, right? And as you can see, what happens next is this is literally where we actually push from. Um, and I'll just speed this up a wee bit. Um, this is where price pushes from. And you might say to yourself, God, I'm pissed off at that. I'm annoyed at that. Like, why? Like, as soon as I close the position, price takes off. I think many of us have experienced that before. Um, but this was my plan. This is how I was going to manage this position. Um, and we got a close below. And the reason I wanted to do 1 minute was this was the because the 5 minute was still open. Right, I was literally just counting there how many candles until the 5 minute closed, and just as I was counting that, something's clicked in my head as to how I could have or potentially manage this a little bit better. Um, so this was the 3rd minute. Um, no, hold on, I can't even count the five. Yeah, so this was the second last candle in the 5 minute, right, and it closed below. And because that was my plan, I get out. And again, even if you look left and you look at, like, well, where are we? Well, we're basically out of support. Um, I could have used that and says, well, if we close below that and even got a bit more specific to structure, um, if we close below that, I'm getting out of the trade. The reason why, I says as soon as I break the low, I'm closing. I didn't want to look at the low and then look at lower time frame structure and things like that. I just wanted to go this done, right? But obviously, when you reflect back and you break it down, you can identify, well, this is lower time frame structure, resistance turns support. What's going to happen at this area? Um, but as well, the 5 minutes still open, so there is every chance. There still is a possibility here that the next candles within the 5 minute, because we're pushing down, push down like this, and just hit stop loss, or push down deeper, and then I end up closing here where I could have closed, here, or where I did. So there's obviously that um those variables, and I didn't want to hang on to a potentially losing trade, right? I says this is how I'm gonna manage a trade, and I'm just gonna manage it that way. I'll reflect back on it. Now, reflecting back on this trade in terms of management, so I closed this out in a loss here. This was a 0.68% loss, right? Less than what I said I'd to lose, 1%. Happy days, right? It's still a loss, but it's a managed loss. Looking at this on the 5 minute, there was no 5 minute candle which closed below here. So this candle was third candle of the 5 minute, like the 1 minute which closed here. Well, how could I have managed this better? Well, I could have said rather than use go as low as 1 minute, I'll use 5 minute. Excuse me. Looking at the 5 minute, we have support. We've already tried to break it once, twice, 3 times. Maybe say a fourth time, failed to do so. A strong area. So if we get a 5 minute close below, I'll exit the trade. Obviously, when I was breaking down my trade last Friday, there was no 5 minute close below, nor was there no 1 minute close below. So that's why I sort of went as far as the 1 minute, because that would be the first potential sign of the breakdown of a 5 minute candle closing below. So How could I have managed this better? Well, rather than use a 1 minute, I could have used 5 minute. And again, if I'd used a 5 minute close and below to manage the trade, I would have remained in the trade. As well as that, if I look at this in a 30-minute time frame, how else could I have managed this better? What could I have done? Well, rather than use the 15-minute low, which is in here, because the reason I used this 15 minute, because this is the breakout candle. Like this is the breakout candle in on the 15-minute time frame. What I could have done was I could have used the low of the 30-minute, right? Which is still losing less than I set out to lose with my whole stop. So even if we broke down here, I still could have closed and I still could have managed that position. And in doing so, it gives me more room to breathe in this area. And if I just look at what the 5 minute, what the lower time frame structure is at that level, it's another 5 minute support. 1 minute, we look at this again, it's just more 1 minute structure in here. So, looking left, we obviously have here, which is basically when we break out, this is where we come back to. So we come across the board, we come back to it again. So what I could have, even looking at this 1 minute structure, I could say, well, if we're going to get down to here, what does price have to do first and foremost for it to be able to reach here? Well, it has to close inside this support and resistance zone, because when it closes within, we can there's a greater chance that price will continue down. Whether price pulls back and respects a resistance for lower resistance to continue down, or whether it just continues down. So if I use this support and resistance again, this is 30-minute low here, but looking at this in lower time frame, this is more so like the structure, where price has pulled back to after breaking out. So it's pulled back again. Does it close inside? No. So there's obviously how I could have used 30-minute, the low of the 30-minute candle in line with the lower time frame structure. And as soon as I seen a close in here, get out. And this would have been like the last point of potential um contact before I made that decision on each position. So I could have used the 30-minute low instead of the 15-minute breakout. Essentially, the low of the 30-minute is this is the breakout candle on the 30. So by using this low, gives me more room to breathe, more room for the trade to breathe, and my stop loss is still in a safe position. Like it's not too tight to the low where I wouldn't be able to manage. If I had a stop loss way up here, then it would make sense to use the 15-minute low in here, because you're basically already hitting full stop loss at the low. So that was, quite interesting to kind of reflect back on. Um, so that is how I could have improved the trade from a management standpoint to give myself more room. Um, and again, like understanding over time frame, the zones and how, excuse me, they were being respected was quite good to see. And this is what was interesting about this daily resistance, because as you can see, price pushed up at on the open, or not on the open. I shouldn't say the open. A quarter to seven, quarter to eight. Apologies. Um, price pulled back, and then we pushed and we tapped into the daily resistance, right? Then we formed a resistance, and if I just skip through, so we eventually did hit the target. However, from an efficiency standpoint, trading from here to here is efficient, because you're basically just in and out. You know what I mean? And you would have had to sit through, pull back all the way down to near enough entry. This candle opens, we come back to entry. We kind of see we do struggle. Don't get me wrong, price does push through, but you know if we got to here and we pull back and came all the way back, like I was saying earlier, I would look at this and say, well, this should have been my target. Not to say that you can't target up here, because it does make sense from a 4 hour perspective, because it's the most recent resistance looking left, this area. But so what I done was, when I actually managed this position and closed out of this position, um, when price started to break up again and it basically formed a higher support, closed again, I entered a second position, um, or a second trade, sorry. Exact same entry, exact same stop loss. But what I done was I just did a targeting up here. I targeted here, and over 0.5%. It's just sort of like the minimum for me in terms of what I'll enter a trade for. Um, but I was happy to just trade this to this, and there was sort of no dramas with this trade in terms of when we get into the trade, we pull back, respected the Asian high, and then we got that pop to the upside. And the last 15 minutes of the hourly candle leading into London Open, which historically sometimes does give that a nice push, was, gave that push today, and it was able to get you away from entry, a safe bit away for when the open happens. Any sort of sharp pullback, you're sort of in a safe position in a sense. But excuse me. So yeah, the first trade, money's loss. Um, there's definitely ways I could have improved that, or could have managed it on reflection, in terms of using the 3 minute low, and of course understanding that 5 minute structure a little bit better, or the 1 minute structure, in terms of where price eventually did come back to, um, and identifying the target, being able to adjust that target, be able to get a more efficient trade, be in and out, um, and yeah, so overall it was like a 0.13 loss for the day, so very minor, but um, it was a good day overall, especially for learning and implementing and progression. So that's my trade breakdown. I know this is videos went on for what, 20, coming on 28 minutes here, which is a long video. However, um that's sort of my in-depth thought process of my analysis, my entry, and how I managed the position, how I could have improved the position, and then how I gave my trade a second chance, because structure was still intact, the idea was still in play. This was just a bit of a deeper pullback, to then continue. Um, so that is that, and I'll get that one uploaded. But appreciate you watching. Like the video, subscribe, that sort of stuff. And enjoy your weekend, folks.